Hi, welcome to the Market Alert for Wednesday, the 30th of April 2025, the last day of April already, heading into May, where we can look forward to a potential rate cut by the Fed. But yesterday, stocks and bonds rally as soft data slumps. Trump's first 100 days, worst for S&P since Nixon. Wall Street extended on gains for a sixth consecutive win streak, with Trump expected to ease tariffs for US automakers. Here we go again, easing the tariffs. There won't be any tariffs by the time we get to the 90-day postponement, which is going to be sort of the end of June. Stocks grind higher with bond bid on soft data ahead of event-filled Wednesday. So let's have a look at the event-filled Wednesday. What have we got? We've got German prelim CPI, so German news there, but they never give a time for the German inflation. Got ADP at 115, 130 advanced GDP, employment costs, advanced GDP price index, 3 p.m. core PCE, and pending home sales. So there's a bit more news than normal, but the market really isn't interested in that. It's what Trump is going to be doing with the tariffs, if he's going to do anything anymore. So let's have a look at the markets for yesterday, as we had a sixth day to the upside, and kick off with the Dow. So the Dow up again yesterday. It's going to go a lot higher. It could even go back to its all-time high. Just wait till they cut rates next month, and we'll soon see the market blast back up to the top of the 45066. And the metals then should move a bit as well, dollar lower, depending on what the size of the cut is. So it's going to stay quiet until we've got the interest rate cuts coming in. Yesterday, in the 30-minute chart, the market was up. It then pulled back initially, and then it was plain sailing to the upside down a bit overnight. But don't worry about that. We'll soon get back up to the highs there. So we can see there we've got 40,636. So moving up quite nicely now. We're just back to the daily chart. We've got to take out these pink lines, resistance lines in the 50 EMA. Let's just have a look at those, see what they are. Well, we've obviously got yesterday's high to take out, and then we've got another high just sat here. Let's just remove this one and then move back to this one. It doesn't like that for some unknown reason. Just grab that. So we've got a high there as well. There we go. That's the one we need to look at. 40,946. So 41,000 just needs to get through there. Probably do that today. We've got nice prices holding above the 5-bar moving average there as well. Let's have a look at the DAX, which seems to be the star performer at the moment. So German DAX now above the 78% retracement, not far off the all-time high. That's a given, absolute given, that we're going up to there. Even though we've got the momentum dropping each day, the volume's dropped off a bit, but nobody wants to sell into this. They're going to keep the markets moving up. They're going to continue to do this until they can't, and that could be for years. But the Fed has the tools. The Fed will find a way, whether they take the money from you or whatever. They will not let these markets crash. That's and also another given. We've seen that over the last nearly 20 years now. When we had the 2007-2008 mortgage problem, you can see that they've brought the markets back. They're vertical, and they're going to continue that way until they can't have or don't have any tools with which to do it, and they let the whole house of cards come down. But until then, they continue to move the markets higher. Yesterday, we were up. We pulled back to the DP, and then they moved the market up, and at the moment we're above the DP, but just struggling a bit there with the close. In fact, let's just go back to the daily chart, and let's have a look and see how many points this market's put on since we had that low a few weeks ago when the tariffs were postponed. And you can see there already we've piled back on 3,724 points. More to come. 23,478 is the upside target. The German economy is on its knees, and yet the markets continue to move higher. Make of it what you will. It's just utter madness, but that's the way it is. And in the S&P, this continues to move higher also. Let's go back to here, just see where we are. Again, we're at 78% retracement just from the highs. This one will be around the same. So yeah, no problem at all. Continue to move higher. So you can see yesterday, market's down a bit overnight on this auto tariff headline that we've seen, but otherwise not a problem. Back to the all-time highs. FT 100 Rachel from accounts will be absolutely thrilled, as will 2-tier Kia. Market moving up there, just needs to get through the 89, and the all-time high of 8,910 is on the cards for the FT 100 as well. This has come back quite nicely. 30-minute chart yesterday, lovely, bit of a shakeout to begin with, find support and up we go. Finding support at the DP at the moment as well, above the 50, above the 200, and we'll continue to keep moving higher. You'll get the odd day where it will pull back as normal. We've gone back to being a normal pattern now, where you can get the market moving lower to begin with, and then as soon as the selling's out of the way, they move the market back, but there'll be no crash. Probably end up like Michael Fisher, for those of you that were aware of him in 1989, I think it was, when he said there will be no tornadoes or strong winds, and most of Surrey got lost its trees. But I just cannot see a crash in the markets. I mean, look, we just had the chance to do it with the tariffs. We've had it with COVID. We had it, and they just keep bringing it back. So it's a matter of, it's an old cliche now, buy the dips, but you can see for yourself, you only just have to look here, buy the dip, comes back and goes back up. So, yeah, let's have a look at the US dollar. So US dollar also gaining strength as well, starting to move back to the upside as well. I'd expect this to continue. So that means the metals are going to be moving lower. So let's have a look at those. And starting off with silver, it's stuck in a sideways range at the moment. It's consolidating. The only best option here you've got at the moment is that it stays in a sideways market there. Otherwise, this too is going to see a pullback, a decent pullback down to the 200 MA as well, 31.50. And it's starting to look that way as well. So the silver moving sideways to low. If it takes out the green line from Monday, I think, isn't it? Yes, it is. So let's just have a look. 32.64 is that line. 32.60. 64. There we go. So watch the low from Monday as well. Markets down on the overnight as well, which you can see is just coming off the low. Expect this to be retested at lunchtime with the usual smackdown, the daily smackdown, and then of course we'll have Friday's bigger smackdown that we get in the afternoon. And yeah, so let's have a look at gold. That's also trading in a bit of a sideways. I'm expecting lower prices in gold as well until we get the rate cut. 20 bar moving average there being the first downside target, which gold needs, to be honest, so not a problem. 3267 is the first downside target for gold as well. 30-minute chart also coming off the low in Asia, but don't hold your breath. Like I say, these markets need to come back a bit more than they currently are, and the dollar's stronger, and it's waiting for the Fed's decision to cut rates. Let me just have a look and see when that's going to be. So there we go. The next one is Wednesday the 7th, a week today, and they're not showing any cut in rates there, but there'll be pressure to do that. And then he's got his press conference as well. If they don't do this in May, then it's going to be the next quarter before rates are cut there. So I would expect a rate cut there, saying 4.5 at the moment, to remain unchanged, but let's see. I think you'll find that he'll be under pressure from Trump in order to cut there. Right, let's have a look at the gold-silver ratio. And this too is sideways. I'm expecting this to have a sharp move to the upside once more as well. This gap needs to be filled. So again, let's see if the silver price can hold. It's looking weakish at the moment, as is gold. It's stuck in that sort of sideways to lower, making lower highs each day at the moment as well. Right, quick look at yesterday's trades. So yesterday things have calmed down. You can see we was, market moving higher in the pre-market and then moving up to complete a 100-point move from the pre-market into the opening of the cash market there. And then prices consolidating a bit sideways there, but holding quite well, still above the 200 MA, the 50 EMA, as they move prices back to the upside up towards the R1 before we then get a potential sell signal that spikes down, and then the market pulls back from where we saw the market open and then retest the 50 EMA. Prices then move back to the upside. What a surprise, back above the high as well, of course, and then into the morning they're just getting towards the high, not closing above it, but heading back to the previous day's high. And that's what we'll see again today once we kick off and we have a bit of selling first and then move the market higher. So prices again going back up to the high in the pre-market Dow, and then prices moving back up to the 200 MA. I got out of this trade too early as prices, we got the news, we got the jolts there, and then we spiked up, and then obviously after the news, despite it being bad, the market it didn't sell off, and we end up with a loss there before we then end up with another profit. We hit the high, and no, there isn't another signal, there was only the three I'm thinking about the day before. So we hit the high, we managed to achieve the goal on bad news, and then prices just trade sideways and then back above the high. So it was the poorest jolts numbers for 5 years. So, amazing, isn't it? Market doesn't sell off, ignores it, and moves back to the high. And that's what we're going to see until next week. And then we'll get even more bullish if we do get a rate cut. And a quick look at where we are overnight. At the moment, we're sitting at the close. Let's just have a look, see where yesterday's high is. It's only about 70 points away. So that's where we're heading for today, just to keep that momentum on the upside, get at least 4,000 points back from the Trump tariff postponement. Right, that's it for this one. Have a great day. And as ever, thanks for watching. See you in the next one.